Hello, good evening. Welcome to the First Time Home Buyer webinar. My name is Boris Sapozhnikov and I am a mortgage professional who lives and works here in Canada. I will be happy to help first time home buyers across all of Canada. And it doesn't matter what is your background or from where are you. I will be happy to help you with your first purchase. I'm usually doing different type of webinars and every 2 months. And today my main focus is for first time home buyers. I will start my presentation with disclaimer. This information is made available to you as self-help tool. So this information is useful, but unfortunately I cannot guess and I don't know your personal circumstances. So this is just general information, and if you have any questions, you are welcome to use the chat and ask any questions that you have. As you can see at the bottom of this page, a question mark sign. This means that every time that you will see question mark sign, I will pause a little bit and will wait for some questions. And we'll check if any questions in the group chat. I can see some already wrote hello or hi. This is exactly a place where you can ask your questions. You can write your questions virtually almost on any language. I can use Google Translate to translate your questions. I'm personally speaking several languages, so I will be able to understand some of them. Some I will just use Google Translate to translate. And I believe we're good to go. So, who is a first-time home buyer? If you never purchased a home before, you're first-time home buyer. If you recently experienced a breakdown of marriage or common law partnership, you're first-time home buyer. So basically, even if you are a married couple and you live in your home, but from some circumstances you decided to go through divorce or break down your marriage, you immediately become first-time home buyers because you need your own home. If you last 4 years didn't occupy a home that you or your current partner or spouse owned, you first-time home buyers. So sometimes people purchase a property after they sell, go into the rent, 3-4 years passed, and they can become a first-time home buyers again. It means that every law, anything that regulated by federal government across all of Canada regarding first-time home buyers, all this apply for you. Some local laws, provincial laws, also apply for first-time home buyers. I'm not going to speak about any specific based provincial laws, but if you have any questions, you're welcome to ask. Not just today, anytime. So what are requirements to get pre-approved or approved on the mortgage in Canada? How you buy property? So a lot of people think that they should find a real estate agent and start to look for property. It's not really the best scenario. What is better way to do is go and speak to some financial professional, someone who is working with mortgages. Make sure that you pre-approved. You go this on hard copy paper or on PDF file that can be emailed to you. So basically you have a document, and this document says that you or your family pre-approved for mortgage. When you have this document, it's much more easier to shop for a home, because if you will shop for a home and you're not sure what can you afford, so it can be frustrated to go and look on something that maybe you can't afford, or maybe you actually can afford something better and you don't know. So pre-approval or approval is better to start as early as possible. So the first requirement to get financing or mortgage is down payment. Down payment is the amount of money, basically cash, that you have on your account. It can be on your checking account, it can be on a saving account, and can be on any special account like RRSP, TFSA, or any other accounts. We will speak about this account today as well. And this money should be on your account for at least 90 business days. If this money is not on your account 90 business days, you should explain the source of this money and show how this money come to your account. In any way, if you are a newcomer, you have a good, nice amount of money, you will be asked what is the source of your money. And source can be anything that you brought when you flight here to Canada, or anything that maybe was gifted. You're allowed to get a gift from your family members, like from your parents or your supposed parents. So if you have any specific question about down payment, you're always welcome to ask, and I will go to here. So what is the minimum down payment? Minimum down payment is 5% if you buy anything under $500,000. So if you buy something that costs more than $500,000, you need 10% for anything that more than $500,000. So for example, if you buy something that costs 600,000, so you need 5% for first $500,000, it's 25,000. And for extra 100,000, you need 10%, so it's 10,000. 25 plus 10, $35,000. This is what you need. Minimum requirement for down payment in Canada if you buy a home. Some of this money can be borrowed. We can speak about it later. And if you need to buy something that costs more than $1 million, you need 20% down. Okay, here is our question mark on this page. As you can see in the corner, question mark. So I'm going to look if maybe I have a questions here. So what I see in the chat is just hi, hello. Again, I encourage to write any type of question on any convenient for you language about anything. If you think that it's too private, of course you can keep this question for yourself and ask me privately after the stream. You can reach me easily using Facebook account or WhatsApp account. If you paid attention on the first screen, it was a link. It's called Linktree. Linktree. It's like a tree. Linktree. Boris.s. If you go on Linktree Boris.s, you can easily find me or via WhatsApp or email. You can ask questions there. You can sign up for future seminars there. You can look about any information that, and you can apply there. Like I have options there, even apply without even talking to me. You can apply using website, specially built for mortgage applications. Everything built for convenience, but you don't have to use it. You can just give a call and we can discuss your options. If you forgot how exactly to write Linktree Boris.s, I can here on the chat write it again. linktr.ee/Boris.s. This is basically a link to anything related to mortgages. Okay, let's go back to our presentation. Now about mortgage default insurance. If you buy a home and you don't have 20% down payment, so your down payment less than 20%, 5, 10, 15%, 19%, doesn't matter. It's mandatory to have mortgage insurance. Mortgage insurance insuring your mortgage. It's not your life. It's not your home. It's not for fire. It's not for any damages. It's not for losing a job. It's not for injuries. It's ensuring that you will be okay and you will pay your mortgage on time. It's a government insurance. It's regulated by federal law. It's not provincial insurance. We have only 3 companies that allow to give this insurance, and it can be done only when you're doing mortgage. So whoever will do a mortgage for you will take care to create a mortgage insurance for you. You don't need to worry about the price or cost of mortgage insurance for several reasons. First of all, it's regulated. So if you have 5% down payment or anyone else have 5% down payment, and it doesn't matter to what insurance company you will go from these 3, you will pay the same amount. Okay? If you have more down payment, insurance will be cheaper. So if you have 10% down payment, your mortgage insurance will be cheaper. If you have 15% down payment, your mortgage insurance will be even more cheaper. Here how it works. Let's say you buy something for 400,000, you have only 20,000, it's 5% down payment. Your mortgage 380,000. Why? Because 400 minus 20,000 is $380,000. You need to buy insurance $15,200. So your total mortgage will be 395,200. So what do I try to show with these examples? So basically you're not paying for this insurance from cash. It will be automatically added to your mortgage amount, and your mortgage payment will be a little bit higher, and you will not even feel the differences, because this $15,200 will be spread for 25 years, because if you take mortgage, insured mortgage, so if you have 5, 10, 15%, it will be spread for 25 years. It's again federal law or federal rule in Canada. It will be spread for 25 years, and this amount, $15,200, it will be just several dollars per month that you need to pay, and you will not see this as a separate payment. It will just come together with your mortgage. You will not see a difference really small. Okay, I'm checking. See question mark here. I'm checking maybe, and I have a questions here. Okay, no question, everything clear. Perfect. Let's go for the next. Credit profile. So we spoke about down payment, and we spoke about mortgage insurance in case if you don't have 20%, and now about credit profile. Everyone in Canada should have a credit profile, and if you're born in Canada, when you turn 18, bank give you opportunity to get a credit card. In some provinces it can be 19, like British Columbia is start from age 19. So you get a credit card, and when you get a credit card, like normal standard credit card, you can start to create your credit profile. If you just arrived to Canada, you need to get a credit card, and the general recommendation to have a credit card at least with a limit $2,000, and you need to use only 30% from this $2,000 in order to maintain good credit. By using only 600, so 600 is 30% from 2,000, you're showing bank, you're showing any organizations that will give you money in the future, you show that you have opportunity to borrow 2,000, but you're borrowing only 600. And this is called a good behavior. So how to get a free credit reports and learn about score. TransUnion and Equifax, 2 organizations, are obligated to give you free credit report per your request. So how it can be done? You just Google TransUnion, you go to their website, is there a phone number, you call them and say, hello, I would like to get my credit report, and they must mail it to you. Easy. The same with Equifax. calling Equifax, hello, I would like to have my credit report, and they mailing to you. A problem that they obligated to give you just one report per year for free. You can sign up for their services. They have paid services, TransUnion and Equifax. But what I usually recommend to use third-party applications. What is a third-party application? For example, company Borovo is Canadian big company, works with Equifax. Borovo pull out your report from Equifax and presenting it to you for free. You can look on your report and your credit score every day. You can have this on your phone. You can download your report. You can email your report, for example, to your broker to show and ask him to check if you're in good direction with your credit profile. The same with Credit Karma. Credit Karma works with TransUnion. It's different organizations that can pull out your report from TransUnion. People usually ask, what do I need, Borovo or Credit Karma? Doesn't matter. You can have Borovo, you can get Credit Karma, you can subscribe to Equifax directly, you can subscribe to TransUnion directly, you can use your bank. For example, banks like Scotia, TD, RBC, any big banks have option to look on your credit score. They're not really providing full information, the same as Borovo or Credit Karma, but again, is another option. Okay, next. Activities that you should do in order to have a good credit profile. So you need to use your credit card. As I mentioned, 30% of total credit. Here is a numbers example. You should pay all your bills on time in full. Rent, utilities, telecommunication services. Never use cash for this type of transactions. Why? Because if you have a cash and you start to use to pay rent, no, it will not be recorded that you paid rent. So if you have a cash, it's very easy. Take this cash, put it in your checking account, and no one will ask many questions, because if you're a newcomer, you're eligible when you cross a border. Even you don't need to declare if you have less than 10,000 Canadian dollars. So if, for example, you are family, wife, husband, children, so you, for example, 3 or 4, so on every one member of your family, you can basically put under 10,000, and it's completely legal process. Just remember why you put, when you put, what date it was. Just maintain your records so that you remember what are you doing. Because sometimes I'm asking my clients, what is the amount $2,000 on January 2nd? Oh, I don't remember. It's better to, if you don't remember what are you doing, maybe print out your monthly report. Like you can even not, you don't have to print, you can download on your phone and just make some comments or marks so you will know what was done on this report. Because if you don't know the answers on basic questions about your bank account, you will not be able, I will say you will not be able, you will have difficulty to get maybe any future credits or apply for a mortgage, because questions about your account can be asked, and it's normal in Canada. It's not like it's some secret information. Okay. Next credit profile is loans. So if you need, you can apply for very small loans. And one of the examples of small loans can be RSP loan. RSP is very interesting program in Canada. It's basically a retirement program. So basically you can borrow money, put them on RSP, and this money in the future can be used when you will retire. And this money can be put on special RSP account, not just cash, special account, investment account. Basically RSP is for investment. So you can invest it in somewhere, like virtually in anything. You can invest under an RSP account, even Bitcoin if you want, and hoping that your money will grow. So I'm not a person to ask where you need to invest your money. You can hire a financial advisor who is good with investments, but RSP loans is usually good loans for this type of investments. Okay, so why again I'm speaking now about loans? Because if you have a small loans and small monthly payments, it doesn't have any influence on your future mortgage application, but it may help to build your credit profile. Again, before you're doing something financially, it's good to have personalized advice, not just a general advice from YouTube canals, so where we are right now. It's a good as a general advice, but maybe in your circumstances, it's not the best. Okay, so before you're doing something specific, ask. Uh, Never exceed credit limit. So if your limit 2000 is 2000, you're doing 30% of that limit, 50% of this limit. You're not going to approach this limit. If bank calling you or in any conversation with any bank clerk, they're asking you, do you want to increase your limit? You always say yes. Why? Because increasing credit limit in Canada is good. It's actually signing about good credit behavior. And please don't carry big balances. So if you have money that you owed on one credit card, try to spread it between 2 or 3 cards. If you have to keep money on your credit cards, if you can pay out your credit cards always on time and completely, it's perfect, but sometimes it's hard. So you can spread your money in between several cards. If you have 2 or 3 cards, please don't close any one of them. Use all of them. Even if you don't want to use one of them, just maybe continue to use like once in a while. Why? Because it's important for your credit profile. If you're planning to close any credit card, again, you should get advice. You need someone who will review your credit profile and say it's safe to close. Sometimes people open many accounts and after decided to close and they don't understand that closing something, it's basically sign to the bank that you cannot manage what you opened. So it's not good to close. You will get some small penalty. Your credit score can fail just because you open too many accounts and after you try to close them. If you already opened some accounts, please don't close them. Or you need to speak to someone who understands in these accounts, like this mortgage professional like me, and get advice what can be closed, what cannot be closed. Please don't cancel any old credit cards, even if you want or if you don't need them. Cancellation credit cards can affect your credit score again drastically. It can really remove a lot of points. Like everyone in Canada start with 300 credit points. Maximum that you can get a score 900. So you start from 300 and you need to grow up to 900. Usually, if you in a very short period of time, if your behavior is okay, you will be getting 600 and even up. It's much more harder to grow after 700, and it's extremely hard to grow from 800 to 900. Okay, people ask me, why do I need so many points? I have a credit score of 600. I heard somebody told me 600 is good for mortgages. So I have 600, I'm going to apply for a mortgage. Yes, you can get a mortgage with 600. You can even get a mortgage with under 600. But it will be not the best mortgage. It will be not the best interest rate. So you need to work on your credit profile. The better your score, the better rate, the better mortgage product you can get. My usual recommendation, if you have 800, it means you can put a check mark, your credit profile perfect. You don't need 900. If you have 800, your credit profile perfect, and you don't need anything better than 800. If you have 700, you're okay. You can put check mark, you're okay, and you can go and get a mortgage. If you something between 600 to 700, it's better to get advice and speak to someone who understands how you can fast grow from 600 something to 700, because it will help you to get better mortgage. Again, you can still get a mortgage with 600 credit score, but it's better to get more than 700. So please pay your cards on time. If you need, pay twice a month. Always pay all your balance and before due dates. For example, if due dates March 31st, so tomorrow, so you need to pay your balance today, March 30. If you have any dispute item, this is very difficult question in Canada. Let's say you subscribe or signed up for somewhere, like let's say you got phone, okay, cell phone, and you sign up with some company and you make payments of this cell phone. And let's say they charge you extra $10. And you go and you start fight with them and say, okay, you charge $10. And they say, no, we are not giving you back $10. This is what we wanted, and that's it. You can dispute this. But before you dispute this, before you fight with this company, you need to pay this $10 and after dispute. What may happen if you will not pay this $10? They allowed to report to credit bureau that you didn't pay. They're not reporting that you didn't pay $10. They're just reporting that you didn't pay and you're owing them, and your credit score starting to fail. Okay, so any time when you buying anything, you need to pay for anything, you have a problem, try to solve it immediately. If it's impossible and they still want to charge you, you don't have a choice. Especially if you want to have a good credit profile. You have to pay, keep all your receipts, and start to fight after. Yes, fight may continue weeks or months, but your credit profile will be in good condition. If you will owing $10 and they will believe that you really owing you $10 and you may be not owing anything, but they believe and they're reporting, remove this report from your credit bureau. May take, you will not believe me, but it may take sometimes 2 years, sometimes 5 years, sometimes 7 years. Yes. So this bad case or bad report can be for long time on your credit profile. And every bank, it doesn't matter where you go in Canada, bank, credit union, small bank, middle-sized bank, doesn't matter where you will go in Canada, everyone will know that you didn't pay something, but no one will know that it's $10, and no one will listen to your story. So please be careful with this. So I would like to start to speak about alternative credit methods. Before I want to look maybe some questions I have here. Okay, I have a question here. Can we get one for free from Equifax and one for free in TransUnion? Yes, Valentin, you are right. So you can call Equifax and you will get one free report from them. And you can call TransUnion and you will get one free from TransUnion. And you basically should see almost the same. But some banks and some credit cards not reporting equally. For example, some banks reporting just TransUnion and some banks reporting only Equifax. And I had, in my personal case, I had case when my credit union didn't report not to Equifax, not to TransUnion. So they believed, both of them, that I am not using credit union. So yes, you can get one report from Equifax, one from TransUnion. It's good to get them. It's good to look on them. Again, it's just once in a year, and once in a year is not enough. I strongly recommend subscribe to Boroval, and you will get free reports from Equifax through the Boroval, and you can check your report every week. If you want to watch what is going on TransUnion, usually your bank have access to TransUnion, like RBC, Scotia, TD, they all have access to TransUnion, and you can watch through your bank for free. Or my another recommendation, you can subscribe to Credit Karma and watch what is going on TransUnion. Okay, I hope I answered this question, and I don't see any other questions. I can go back to my presentation. Alternative method. If you new to Canada, or you're relatively young and you didn't have enough time to build credit profile. What do I mean you didn't have enough time? If you just about a year in Canada, it's not enough. If you just 2 years in Canada, even 2 years, sometimes is not enough. To build a good credit profile requires minimum 2 years. Okay? So you can say me, sorry, I hear people buying houses like just arriving, and months after, or 2 months after, 3 months after, they are buying houses. How they are doing this? Okay, so these people who just arrived Canada and buying houses immediately, they have a lot of cash. They have 25% down payment, 30% down payment, in some scenario 20% down payment, and they go to alternative, usually to alternative banks, and they are buying. Okay, but not everyone has 20% down payment, 25 or 30% down payment, or if you're young, you're just 18 years old and you don't have rich parents, you don't have 20% down payment. Okay, but maybe your parents can help you and give you 5%, and you can buy this 5% down payment. So in this scenario, that your credit profile small, what do I mean small? Time frame small. You just about year or about 2 years. Under the 2 years, bank ask about alternative method. It doesn't matter, bank, credit union, any organizations that give in mortgage is asking about alternative method. Okay, so you have a good credit history. You maybe have even score 700, but your history is short, just about a year or 2 years. So what they can ask you, they can ask you about confirmation of your rent payment. So let's say you year here, you paid your rent 12 months, so you can show the 12 months you paid your rent, and this is how you show to the bank that you have a good profile. Another method to show is to show different type of documents. For example, utilities. You paid for your phone, like not cell phone, like cell phone also can be count. Let's say you have a regular phone, or let's say you have cable, or let's say you have internet, or you just paying condo fees or heat in the home that you're renting. Okay, all these expenses can be used, or documents of these expenses can be used to show that you're paying on time. You have a child go to the daycare, you pay for daycare. These documents can be used. Let's say you have insurance, car insurance. Okay, you're driving a car and you pay car insurance. If you paid your car insurance like one payment, no, you cannot do too much about it. But if you pay monthly, you can show, okay, January I paid, February I paid, March I paid, April I paid. So you can show with your monthly payment bills from your auto insurance company that you pay on time. Usually, bank asks about 3 different types of obligations. What do I mean? 3 different types, like let's say cable, daycare, and insurance. Okay, this is 3 different types. Okay, it doesn't have to be these 3, like different 3 types. And this is what you can show to the bank in addition to your good credit. Some people don't have credit at all. Like if they will call Equifax, the Equifax can say, oh, you do just several months in Canada, you don't have credit profile, but you still want to buy. So you can show these documents and it will be good proof. Sometimes client asks me, what can I do if I just 6 months here? In this scenario, you can show your 6 months of your bank statements. Okay? You take all your, whatever happened on your checking accounts, you show all your checking accounts if you have more than one, and you show everything that's going on in your checking account. But look on 6 months of your bank account, looking line by line that you're doing good. They don't care what you're buying, what you're selling, what you're using. Like they don't care about every transaction. They can ask questions about any big transactions, but they're just asking questions. They will never say, oh, we will refuse to give you a mortgage because we don't know what is the 2000 here. Or we don't like this 2000 you got from the friend. Because like you got this from the friend because you helped them. You was moving friend from Alberta to Ontario, and because you helped him with the moving, he give you as a present 2000. Okay, just an example. Like you provided services, you got this as a cash on your bank account. You provided explanation to the bank. No one will be challenging or asking additional questions. Usually 6 month statements is just for people who have at least 10% down payment. So if your down payment 5%, you need to show 12 months of history. If your down payment 10% or more, 6 months of bank statements is enough. Sometimes for non-permanent residents, they want to see a letter from financial institution of country of origin. Okay, honestly, it's really asked. Okay, but it's not difficult to get. Let's say you lived in Poland, okay, and you had a bank account in Poland, and you want to show that you were good there. You can give a call to the Poland, to your bank where you had account in Poland, and you ask them, can you please provide a letter that my account in good standing, and they provided letter. Again, honestly, I didn't hear like too much about this request. Almost never it asked. It's kind of optional request that bank can do when he is suspicious something or they're not sure about something. Usually, if you have 10% down payment, 6 months of your bank statement, no problem. If you have 5% down payment and you have proof that you paid your rent 12 months, usually you don't need to prove anything else. Okay, any questions? Let me check. I don't see any questions. Oh, I have a lot of questions actually here. Okay, newcomer, 5 months in Canada. Every bank give mortgage with 20-30%. Okay, if you are a newcomer with 5 months in Canada, unfortunately, not every bank will give you mortgage with 20 or 30%. Okay, some banks can, some banks unfortunately no, and it's not really easy question because like we just started to speak about requirements. It's not just credit profile and it's not just about money. It's also question can be asked about your income and question can be asked about other things. So if you ask me in general, every bank give me a mortgage if I have 20 or 30%? No, not every bank. If many banks can give you mortgage 20-30%, yes. Some of them, not like many, some of them can give you a mortgage, but you need to get, like, I will say you need to go several banks, like bank after bank and after bank, fill out application, provide all documents, and wait for answer. And they may say no. And you should go to another bank and fill out application, provide all documents, and they may say no. What I recommend you to do, I recommend you to speak to the mortgage professional who knows and work with many banks. Like I personally work with many banks, many credit unions, with many online banks, with many private banks, with many alternative banks. I know many different banks. And when I will know your full story, I can find a bank that fit you with 5 months with 20% down payment. If have 20-30% and I'm newcomer, 5 months, can I get a mortgage in any bank credit union? Where is the lowest interest? Okay. So I believe I answered already the question about 20-30%. So not any bank, not any credit union, you need to know where to go. If you can try just go everywhere and see what happens. Or you can hire mortgage broker. Like mortgages brokers in Canada, them for free. A reason why you never should pay, and this is by the way very important. A lot of mortgage brokers charging in Canada, but a lot of mortgage brokers not charging in Canada. I am a mortgage broker who is not charging fee for my services. A reason why I'm not charging fee for my services, because I will be paid by the bank. So if you come to me and you have questions and you don't know where to go, I will give you answer on these questions. I will take your application. I will submit your application to the bank. You don't need to go anywhere. You can submit all documents to me and I will submit all documents to the bank. All this can be done through secure channel. And when your documents will be submitted, you will get mortgage, you will buy home, no problem at all. After you will get possession of your home, when you start to live in your home, you will start to pay your mortgage on time. Bank will pay me for my services because I found a client to the bank. Some mortgage brokers charge for this. I am not charging, so this is for your information. So please share this information with whoever you decide to share. I am not charging for my services. Next question, where is the lowest interest? Maria, we will speak today about interest rate. If I will even say you where is the lowest interest right now, a chance that you will get this low interest, 0. Why? Because variable rates in Canada regulated by federal government and changed 8 times in the year. Okay? And variable rate right now, standard, 6.7. If you will get a discount, you may get variable 5.7, maybe 5.6, but it's not the lowest interest rate. The lowest interest rate is a fixed rate right now in Canada, but fixed rate depends by how stock market's doing. So people buying financial papers, okay, it's like investments, and people invest money somewhere, and if investments going certain way and investments going cheaper, interest rate going cheaper. So basically what I am trying to say, you can call your bank and interest rate can be 5.2, 5.1. You can call credit union and interest rate can be 5. But if you really want good interest rate, you need a broker who knows how rates change and can see every rate, every bank, every credit union in Canada. We will speak about rates today more in the future, but basically without broker you will never get the best rate. Today is the best interest rate 4.4. If you will Google and you will go to any website of any bank, you will not find this rate. A reason why? Because it's sold banks only through the mortgage brokers. Okay, next question. If we live in Winnipeg, where is the best interest? I believe I already answered this question. You work in Winnipeg. I live and work in Winnipeg, but I work across all of Canada. Okay, I am doing mortgages across all of Canada, from the coast to coast. So if you're in New Brunswick or Alberta or British Columbia, you can give me a call and I will do your mortgage. I'm doing mortgages every day. This is my job. I'm doing mortgages every day from the morning until sometimes 10, 11 p.m. in the evening. So I know where the mortgages, where the prices. This is my job. This is what I'm doing for living. Okay. So, and then last question. Oh, credit score will be reduced when I apply for mortgage. No, your credit score will not fail when you apply for mortgage. Your credit score can fail if you're doing stupid things. Like, for example, I have family that try to get the best mortgage. So they applied credit union, they applied Steinbach Credit Union, they applied Scotia Bank, they applied RBC Bank, they applied TD Bank, they went to the HSBC Bank. So they went 5 places. Okay, they went 5 places. So they did 5 credit requests to get the best deal. And end of the story, they went to speak to me and I did 6 credit requests. Request number 6 to get them the best deal. Of course, their credit score was hard because we did how many? We did 6 credit requests. When your mortgage broker looking for the best deal for you, he's doing just 1 request and shopping across all of the banks in Canada. Okay? Okay, let's move forward. I will pause answering on questions. Last question was mortgage will increase later this year. I don't have a crystal ball. I cannot predict future, okay? Sorry about it. So let's return to the mortgages. Okay. Requirement number 4, income. Employment and income verification documentation. So we spoke about different requirements. Now income requirement. I should have income in order to get mortgage. Sometimes people say, okay, I don't have an income. I'm not making money at all. I just landed here in Canada. I don't want to work. Can I get a mortgage? Yes, you can. It will be expensive mortgage, but you can get a mortgage. I don't like to do this type of mortgages. A reason why, because first of all, you need a good down payment, usually at least 25%, sometimes 30% or even more. And mortgage that you will get, it will be kind of not the best mortgage in Canada. I will say one of the worst mortgages in Canada. So I don't like to do service that I know that it will not be the best mortgage in Canada. But sometimes I'm doing this if client wants and they believe that they will have in the future good income and they decide to do this, it's their choice, okay? But let's speak about standard mortgages. Standard mortgages, when people have 5, 10, 15% down payment, sometimes 20% down payment, have a job and they want to get a mortgage. So if you start a job and you work full time and you work 3 months, you finish your probation, so you're full time, not on probation, you can get a mortgage. Easy. Full-time job, 3 months. Done. This is all what you need. How I get information from you? I'm taking 2 pay stubs. Okay, 2 last pay stubs. I'm taking a letter from your boss that you already working 3 months, that you started, that you're good employee, not on probation, done. Very easy process if you regular salaried employee. If your income is variable, if today you paid $20 per hour and tomorrow you pay 25, if today you work 7 hours and tomorrow you work 8, and next week you work 6 hours, so and another week you work 50 hours, when you have unstable, not full-time income, unfortunately you need to wait 2 years until you will get a mortgage. Now, it's a general rule. Sometimes I can do exceptions from this rule, but I need to speak to you in person or via the phone to understand why your income is variable, and maybe I will find solution for this. But in general, if your income is changing, you need to wait 2 years before you can apply for a mortgage, and a lot of documents required is T41, notice of assessment about taxes done, of course pay stubs, job letter. Yeah, so I have a lot of examples here. I'm not going to explain every example. This webinar is on YouTube. You can always go to the same link and watch this video again and again and again. So I'm not going to explain about commission-based income. My income is commission-based, like commission paid by bank when I'm doing mortgage. So in my case, I need 2 years in order to apply for mortgage. Interest and investment. If you investor, different documents apply here. If you business owner, you need at least 2 years. If you business or sole proprietor or incorporated, you need at least 2 years. Again, different documents required. If you're first-time home buyer and you're business owner and you already filled out your taxes for 2 years and you see this explanation of documents, I strongly recommend give me a call and I will explain you how to get all those documents and we'll put it in order. Again, it's just an example demonstration what type of documents you need if you're a business owner. And it's not a problem to get these documents. Just give me a call, I will help. Alimony. So if you separated and you're getting alimony, if you're raising children, you're getting Canada Child Benefit. Canada Child Benefit can be used as an income. If you're on maternity leave, employer letter, pay stub before you leave, ROI, record of employment. So even if you're on maternity leave, you gave a birth, but you basically plan to return to the same job, you still can use your income. Yeah, it's interesting. Many people don't know. They think, oh, I gave a birth to the child, so I'm not eligible for mortgage. It's not true. You gave a birth for a child. We're very happy for you, and you're still eligible for mortgage. About the stress test, I believe a lot of time when you heard about mortgages, you heard about mortgage stress test, about how horrible this, how difficult to pass mortgage stress test. Here is the explanation of what is a stress test about. Honestly, it's not really kind of difficult to pass stress test. And the job of mortgage broker is actually to explain and help you to pass this mortgage stress test. Pass, I mean by doing this according to the law, not just pass, oh, some tricks, how you can pass a score. No, you doing this together with someone. Even if you're not using mortgage broker, you go to the regular bank. Let's say you decided to go to TD Bank. Okay, nice, beautiful bank. You went into the TD Bank. By the way, I'm working with TD as well. So if you go to the TD Bank, you speak to the mortgage specialist in TD Bank. He will help you to pass this mortgage stress test. Okay, and my job as a mortgage broker to help you to pass stress test as well there, or at any other bank if you will decide to go to any other bank, Scotia, for example, or credit union or any other place. Okay, so let's move forward. Okay, you can see here. Okay, I believe you should see my screen right now. I am going to show some calculator. Okay. Okay. Here is the calculator. This calculator showing how this stress test actually works. Here's in the corner stress test rate. I took an example here, rate 4.5. Okay. Standard mortgage rate 4.5 for 5 years fixed. Amortization, standard amortization 25 years. Okay. Done. Okay, so let's say a property tax $2,000. Somebody wants to buy a property and has just $50,000 income. So you can see here, if $50,000 income, you can get a mortgage around $200,000. Usually, people ask me, how I pass stress test, kind of panic mode. How I pass stress test, what should I do? You don't need to do anything. You should know your gross income. If your gross income is 40,000, you multiply your gross income 40,000 by 4, you get 160,000. This is approximate number. What will be your loan? Okay? What will be your mortgage? Let's say, just for example, change income here to 80,000. Okay, so 80,000 income, what I can see, so loan will be like this. Again, 80,000 times 4, 8 times 4, 32, so 80 times 1,000 times 4, so $320,000. Again, the house here has a $2,000 tax. Usually if houses cost more, tax is bigger, so it's approximately $3,000 tax. So you can see $335,909 will be mortgage. Again, it's exact calculation. You don't need this calculator. You don't need to do this exact calculation. You have a gross income. Your partner has a gross income. You put these two gross incomes together. You multiply these two gross incomes together by 4. This is approximately number that you will get. This is approximate mortgage that you will get. Maximum. Okay, this is a maximum mortgage amount. I would like to look, maybe I have more questions here. Okay. Mortgage will increase later this year. I already said that, I don't know. Self-employed more difficult by 30-40%. It's okay, cheap. Okay. Self-employed is not that it's more difficult or more easy. Self-employed is just a person who decided to have his own business. Because he decided to have his own business, bank wants to know history of this business. And it's not like I'm working to the company. If I'm working for the company, the bank knows this company existed 10 years, 20 years, 50 years, 70 years. So bank don't worry about the mortgage, because if I already work 3 months and my boss says that I will be okay, so they know that everything will be good. So it's not that self-employed doing something wrong. They just don't know him. He just new in the business. This is why the bank wants to wait 2 years to see how is business doing through these 2 years. So if you show what you did in first year, what you did on second year, and you have like what you make here, what you make there, bank can look on your documents, compare, and approve you. So it's not a problem. Again, down payment is important in Canada, but money is just one factor. Okay? So what do I mean by one factor? If you are self-employed and you just started 4 months ago, and you have history just 4 months of self-employment, you will never get the best mortgage in Canada. You can get mortgage, but not the best. I'm not saying that you will get the worst, but you will get not the best. Why? Because you have a business and you cannot show 2 years of business. You can show just 4 months. So it's very, very individual what is going on with every person. Okay, so let's continue with our presentation. Closing costs. So not just a payment is a requirement. As I say, down payment is just one factor. So credit score, it's another factor. Employment is another factor. So down payment. Your credit history, very important. Not just your credit score, your credit history. How you, is it long history? Is it short history? What you were doing through this credit history, how you used your cards through this history. So now requirement number 5, closing cost. What is about closing cost? Closing cost can be lawyer fees, appraisal fees, GST, PST, where is applicable these taxes, land transfer tax. In one province it can be just $100, in another it can be $1,000. All these closing costs usually cost you something in between 1.5% up to 2%, and sometimes even up to 3%. Clients who ask me, Boris, can you please let me know what is the minimum? Minimum is a 1.5. What is the maximum? Honestly, I don't know. What is the average? About 2%. And let's calculate example of closing costs. So I need a calculator here, and I will show examples of closing costs. So where is, okay, closing costs. So let's say someone buying home for $400,000. Land transfer tax can be $4,000. Let's look where we have this tax in New Brunswick. Okay, so I had client in New Brunswick. This is what was his tax. But let's say you're not in New Brunswick. Let's say you're in Manitoba, like Winnipeg, Manitoba. Your tax will be for the same home $5,650. But let's say you're in Calgary, Alberta. Your tax will be like just $377. Nothing. Okay, so it very depends by province what will be your closing cost. So let's stay in Alberta, okay? So let's say your tax is small and you need title registration is $377, you're not paying any PST, your appraisal will be $400. Appraisal is when bank checks how much this house costs. So you pay for this, is usually around $400. It can be more expensive. You decided to do home inspection, $350. You can put here moving costs. But if friends helping you with the moving, you don't need any moving costs. Adjustments, it's when different balances, sometimes it's around $1,000, it can be less, it can be more. This adjustment usually done by your lawyer, and lawyer fees is $1,000. But it can be different. Like your lawyer can be $1,500. Your lawyer can be, sorry about it. Let me put. Your lawyer can be $1,500. You may have adjustment that just $540. Your bank may not require appraisal, so it will be $0. You may pay for inspection $600. So you see, it called a change. Total estimated cost approximately 0.75. So even under 1.5%. But you should remember, no bank in Canada will allow you to buy if you just have on your account $3,000. Bank check that you have down payment, and bank checks that you have closing costs. And minimum requirement by almost every bank in Canada is 1.5%. So bank doesn't care that you're in Calgary, and bank doesn't care that you're in Manitoba. They want to see that on your account at least 1.5%. So it actually may cost you less, but you should have an account reserve. So if, for example, the same home you buy in Manitoba and tax will be higher, so here you see you actually will pay more than 2%, 2.07%. Your closing cost will be more than $8,000. This is why bank doesn't want to think you're in Alberta or you're Manitoba, you're Winnipeg, or it doesn't matter where are you. Bank wants to see, your credit union wants to see, any bank wants to see that you have at least 1.5% closing cost. How it calculated? Very simple. Like you buying house for $400,000, take 1.5%, it will be $6,000. This is a minimum that you need to have in your account if you buy something that costs $400,000. Let's see if you have any questions about closing costs. Okay, you don't have any questions about closing costs. I hope it was clear. And if it's clear, let's continue. Again, if you will have any future questions, don't hesitate to ask me these questions in the future, okay? So you can at any point of time ask me any questions, okay? So I'm returning to presentation, and I would like to speak about several programs, okay? I know that everyone already tired, evening, and this presentation already more than an hour. I really hope that you find this information useful and important for you. Again, if you will have any questions, you can reach me by just calling me. My phone number to 4998-8349. You can text on this number. You can use WhatsApp on this number. You can reach me through the Facebook account or Twitter, whatever media you prefer to use. Okay. So first-time home buyer initiative. So usually it's a very interesting program. Sometimes if you have 5% down payment, you can add another 5% from the government, or if you construct a new property like construction, you can get 10%. For example, you have 5%, government give you 10%, and this is only in the case if you're first-time home buyer, and it's called first-time home buyer initiative. It's not a free money, okay? Government give you this money and expect that you will pay this money back. So how it works? Let's say you receive 5% initiative on home purchase price 200,000. 5% from 200,000 is $10,000. If your home will cost more, let's say it will cost 300,000, you still need to return to the government 5%, $15,000. If your home will decrease, let's say instead of 200,000, it costs already 100,000, so you will need to return government still the same 5%, 5,000. So it's kind of loan, but no interest attached to this loan. This is equity loan. What do I mean by equity loan? So if your house increases in the price or decreases in the price, you're returning the same 5% when you sell your home. Or if you lived in this home all 25 years, you will return this 5% after 25 years if you will never sell your home. Okay, this is just an example of this program. If you need more information, you can always ask. usually people who has income under $120,000, they qualify for this program. Your total borrowing usually no more than 4 times your qualified income. Your first-time home buyer. You should be Canadian citizen or permanent resident or non-permanent resident authorized to work in Canada. So basically, if you have work permit, you can do this program. You meet minimum down payment requirements. So I can easily check if you're eligible for this program, and we can discuss if it's good for you or not good, if you should do it or should not do it. If you live in the area like Toronto, Vancouver, or Victoria Census metropolitan area, your qualifying income can be even higher, up to $150,000 instead of $120,000. And your increasing borrowing amount can be 4.5 instead of 4 points or times 4. I believe it's clear. I would like just to check if any questions. I just got a message. What does it mean 5 years fixed interest? After 5 years, the rate going to change? Okay, excellent question. So I just noticed that I got a question about what does it mean 5 years fixed interest. So in Canada, it's not like in the United States, okay? In the United States, if you got a mortgage for 25 years or 30 years, you pay the same interest for all 25 years or 30 years. In Canada, we have amortization. Amortization is the total number of years, okay? And we have a term. Term can be 5 years, 4 years, 3 years, 2 years, 1 year, 6 months, 7 years, 10 years. So term can be anything that I just said. So what does it mean 5 years? It means if you take a mortgage, you pay, if it's fixed interest, so you pay the same interest rate, your payment will be the same for all 5 years. At the end of the 5 years, you can do whatever you want. You can pay out all your mortgage if you have money. You can switch a bank. You can go to another bank. I'm not only specialized in first-time home buyers. I also helping people switching banks. Sometimes people calling me, oh, my RBC 5 years ended, and they said me that now I need to give 5.2. And I usually say, no problem, I can switch you to another bank who give you 4.8 or 4.9 or 4.7 or maybe even 4.5. It depends by circumstances. So yeah, so basically 5 years rate, it's not 5 years rate, it's 5 years term. And at the end of this term, your rate will change according to this bank policy, or you can switch to another bank and you can get another rate. Thank you very much. You are welcome. How to apply the first home buyer initiative? Your mortgage broker will apply for your first-time home buyer initiative. Or if you decide not to go with a mortgage broker, you decide to go with a bank, your bank, you need to speak to the mortgage specialist, explain to your mortgage specialist what is the first-time home buyer initiative, and they will help you to apply for this. Unfortunately, not every mortgage specialist in every bank knows about this program, not because they not studying or they don't know. A reason why they don't know about all this type of different programs, because maybe their bank not doing this too much and they're not used to this program, but another bank maybe actually doing this to every customer. So again, it's not your headache, it's not your problem how to apply for first-time home buyer initiative. You pick a bank and you speak to the mortgage specialist in the bank and you ask them to apply for you. or you just hire a mortgage broker for free who will apply for this program for you, and it's not your headache. Another question, can I get mortgage with 30,000 income a year? Of course. You can get a mortgage even if your income 10,000 in a year. It doesn't matter what is your income. What is matter, as I said at the beginning, that you have a stable income, you can get employment letter, you worked at least 3 months, you full-time employed, yes, and you will get a mortgage. So it's not a problem to get a mortgage if you salaried employee. It's a little bit more difficult if you business owner. For business owners, it's usually just difficult because they need to have 2 years. But if they don't have 2 years, I know some solutions when business owners can get a mortgage even faster. So again, yes, with 30,000 income in a year, you can get a mortgage. More than this, with $1,000 income in a year, you can get a mortgage. So basically, we don't have a law in Canada saying you low income, you're not eligible for mortgage. No. Everyone in Canada who made all these requirements can get a mortgage as long as you match these requirements. Okay? So let's move forward. The Home Buyer Plan, or HBP. It's another program for first-time home buyers. How it works? If you remember at the beginning of the presentation, I said you can take a loan for RSP, or you can just put a cash in RSP. What is RSP? It's a saving account, but it's not simple saving account. It's actually investment account. So you actually can invest your money somewhere. Okay? So you take your cash, you put in under RSP. RSP you can find online, or you can put just in your bank, and you find the way where do you want to invest, and it will be there. And it will be there until you will retire. But why we are talking about it at all? Because if you first-time home buyer under HBP or home buyer's plan, you can take money from RSP. You can take out money from your pension plan, because RSP it's actually investment retirement plan. You can take your money from there and put as the down payment for your mortgage. If you take this money out from your retirement, you have 15 years to pay them back. So for example, you have 15,000 in your retirement plan. You take them out and you use it as down payment. Now you have 15 years, return this money. So basically you return $1,000 per year, and you return all this money slowly back to your retirement plan, and you're good to go. You cannot put there, like you can put there as much as you're eligible. You can ask CRA, or you can ask bank to help you. But maximum money that you can pull out from your RSP, 35,000 per user. Why? Because this is how this plan works. Like if you are family, so 70,000, okay, 35,000 for husband, 35,000 for the wife. Now, very important, if somebody wants to buy home soon, and if you put money there, you probably will not be able to take them out. They need to stay there at least 90 days. Okay, so be careful with this. If you're not sure, ask. Okay, ask mortgage professional. He will help in your personal circumstances. So again, what's required for this plan? FTHB is first-time home buyer. It's not a problem to get this money. You have a written agreement, you have an offer accepted. It's not a problem. Pull out this money from HBP plan. Again, I have some more information here. You can read it. You can, after watch this video again and read it again and again. If you're working with professional should be able to help you with investment and how to pull money from investment. I cannot say you where you should invest money, but I can help you to pull out your investment and use as a down payment. Okay? The most easiest investment is cash investment or GIC investment, GIC. It's called guaranteed investment in Canada. When your money is safe and in return on your investment safe, and you will get all money back. Home buyers plan for no down payment and closing costs. Sometimes people don't have enough money and they can use RSP maneuver. I don't want, again, to talk about this maneuver too much. Basically, idea, let's say I have a good job and I have a good credit score. What is good? 700 my credit score. With my good job, I'm making 50, 60, 70, 80,000 per year, okay? Good job enough. I want to borrow money and invest. So I can take loan, for example, $20,000, okay? I took a loan, $20,000, and invest in RSP. I put under some interest, okay? According to Canadian law, if I put money in investment for my future retirement, I will get tax refund. We are doing taxes right now, so, but it's too late for 2022 taxes. But if you invest today or tomorrow or during this whole entire year until February 2024, you can get return when you're doing your taxes in March 2024 from your investment. Again, if you want more details, I can explain. If you want to speak to an accountant, you're more than welcome. So you get tax refund. Now, you start to pay for your loan because you borrowed money. You don't have money for down payment. So you start to pay loan. This loan will be reported to your credit bureau that even help more to your credit score. Money sits in your RSP account. You wait 90 days, you pull out money from RSP account, you use HBP plan or first time home buyer plan, and you invest in your home. So you basically have loan here, loan there. Yes, you basically borrowing all 100% of your home. This is possible in Canada. It's not easy to do all this movement, but if you have a mortgage professional, he or she will help you to do this. I'm doing this with my clients when they need to do this, and it's completely safe and legal process in Canada. So when people using this process, usually when they don't have cash, okay, they don't have cash, but they have a good job, they have a good credit score, so they borrowing. They basically, let's say, they borrowing 10%, okay, 90% is a mortgage, 10% is a loan, so they basically borrowing all 100%. So all 100% of the home borrowed, and person, so again, all 100% will be borrowed, and person can buy home even if he or she doesn't have, or family doesn't have down payment. Okay, be careful with this option, because you need really someone who will do all calculation for you. Miscalculation can lead with a lot of money lost and declining mortgage, so please be careful. Or use mortgage professional who knows what he is doing or she is doing. Oh, I didn't check questions. Okay, I'm going to check questions because we have a question mark here. Can I available both first time home buyer initiative and the home buyer plan RSP? Yes, you can use both plans. You can use first time home buyer initiative and home buyers plan RSP. You can use many different plans, and you're eligible for every plan for first time home buyer. Again, is it worth it? It's another question. Is it applicable in your personal circumstances? I don't know, but theoretically, question, answer to this question, yes. Yes, you can use all programs. And we have more programs here. Yeah, actually we have more programs for first-time home buyers. And the next one, first-time home buyer tax credit. So you eligible to claim $10,000 on your taxes. So if you are going to buy home in this year, 2023, when you will do your taxes, you are eligible to get return. Return will be 15% from 10,000. So basically you are eligible for $1,500 cash return from your taxes. How it works? Very easy. You work somewhere, okay? You're paying your taxes. Next year, 2024, when you're doing your taxes, you go to your accountant and you take your papers that you have a home, you have a mortgage, and you say, I am first-time home buyer, 2023. Please help me to get back $1,500, and you will get it back. Now, it's not guaranteed $1,500. Why? Because if you made in if you made just in 2023, just in this year, if you made not good income, so you may be not eligible for this return. So all this depends by person. But usually, like I will say, in 95% cases, every person who buy home in Canada usually have some kind of income and eligible for some tax return. So this amount, $1,500, is usually that's what you will get. If you buy this like a couple, it doesn't matter, you still will get this amount, okay? Another program. So as I promised, we have many programs. 2023 program. Government just announced this program, and I believe banks just started to create this account. It's called FHSA account. It's tax-free first home saving account. So if you're 18 plus, you can open account that will be tax deductible as a RRSP, the similar to HBP plan, and also will be free from taxation as TFSA account. It's extremely great, amazing program, but it has limitations. Maximum that you can put on this account, $8,000 per year. You can save money only during the 5 years, so 8,000 every year. In total, you can put in this account maximum $40,000. You have 15 years to buy a home. If you cannot buy a home during 15 years, you can pull out this money from this account and put it in your retirement plan, RRSP or RRIF. RRIF is another modification of retirement saving program, usually using people who is already retired. I don't want to put too many details. So what you need to know as first-time home buyer. This account available in the bank. You can put in this year $8,000 there. No taxes on this money. More than this, because you invested, government will give you some tax return for this money. Example here that I am providing is very easy. What I will say, very realistic or extremely realistic scenario if you're not buying today and you want to buy in 5 years from now. Or you want your son or your daughter will start to save to buy their first home. So your son or daughter, 18 years old, opening FHSA account. They can put $667 every month, and in total it will be $8,000. They can pick a program, that JIG program, that gives return 2.5%. Today, a lot of banks giving 3%, 4%. So 2.5% is just purpose of this example. Is very easy to get 2.5%. Today, RBC give 4%, TD give, I believe, 4%. A lot of credit unions give 4.2%. So it's not a problem to find a bank who will give you a good return or JIG. What is JIG? It's government special document, is investment document. When you invest money there, money guaranteed by government, so it's no chance that you will lose them. More than this, you will earn interest. So if you're doing calculation, you can easily save with even 2.5%, you can easily save during the 5 years $42,000 and use it as a down payment. Okay, it's a question mark here. I will check maybe questions here. Okay, I don't see any questions, so I will continue our presentation. I see many people already tired and started to leave. I can feel this. We already an hour and a half in this presentation. I just wanted to show everything what you can get in Canada. So B lenders, C lenders, or private lenders. So if you have 20% down payment or more, and you can get banks that not regulated by federal. So it can be provincial bank or different type of the bank. It's still the strong bank that can give you mortgage, and this bank may allow you to have high debt loads. This bank can allow to be self-employed, even 1 month self-employed or 3 months self-employed. This bank allowed to use contributory or border income. So like, for example, you're renting 1 room in your home and they will allow this income. If you go with a regular mortgage, you cannot rent room. You can rent your basement if it has separate entrance, but you cannot rent just a room. But with this bank, you can rent out a room. And this bank take in account that you're renting a room for money. If you have a credit problem, this bank flexible. The term in this bank usually between 1 to 5 years. The credit or interest rate usually higher. They can work with a client that credit score 550 or higher, or even with a client that doesn't have any score. This bank can give you 35 years amortization. If you remember, we spoke 25 years. 25 years is the standard in Canada. With these banks, you can get 35 years. But a problem with this bank, they ask you to pay a fee. This fee you pay because they are giving you a favor. They're helping you to get non-standard mortgage, alternative mortgage. Again, I'm not charging you, but this bank will charge you. They can charge you 1%, they can charge you more than 1%. Okay, so if you buy a home for $400,000 and you borrowing 80% because your down payment 20%, so 80% from $400,000 home is $32,000. So from this, it will be 1% fee. So your fee will be $3,200. Okay, 1% fee, not from total purchase price. 1% fee just from a mortgage amount. Okay. Again, some banks charging 1%, some banks charging 1.5%, some banks charge 2%, some banks charge 2.5%, 3%, 4%. Again, you can lose how many banks we have and how many options they have. This is why to work with a broker is to make your life much more easier, because they will find the best option available for you. Okay, let's move forward. Rates. Remember at the beginning of presentation, I got a question about interest rates. So how I know what rates I will get? Very easy. A lot of factors determine interest rate. If you shop early, your interest rate will be better. So time is a factor that apply to interest rate. Fixed versus variable. Variable rates today higher than fixed. So if you pick a variable rate that change 8 times in the year and regulated by Bank of Canada or Federal Bank, so basically you will depend by these regulations. If you have a credit score and it's good, and your credit history is good, your rate will be good. I mean low. If credit score is not good, your rate will be higher. Okay, if your credit history was like this, with some bumps, with some problems, maybe you created problem, you even not understand the problems that you created. All this can affect your rate. Who can check? I can check. I, for example, can look on your credit history and together with you, yeah, I forgot to mention, if you subscribe to Borrow or Credit Karma, it's not affect your credit score. When you subscribe there and you check your credit history and look on your credit history, and you can review this credit history together with me via Borrow. When we look together on this credit history, nobody knows that we are doing this because it will not affect your credit score. So this is the most safest way to check your credit score history through these companies, because you can check there like 100 times. If you ask bank to check for you, and you go to another bank and you ask to check for you, and you ask broker to check for you, your credit score may affect and may go down. Employment type of income. If you're self-employed, you usually interest rate higher. If you have corporation or something like this, your interest rate may be higher. If you're salaried employee, you usually can get better rate. Loan size. If you borrow 100,000 or you borrow 1 million, your interest rate will be different. If you borrow 100,000 or you borrow 250,000, your rate will be different. So rates sometimes depend by loan size. Home value. If your home value good, you get better rate. If your home value is not good, you can get worse rate. Loan to value. What do you mean by loan to value? How much you put as a down payment. If you put a down payment 5% or 10% or 20 or 30%, it will be different interest rates. So it depends by your down payment. Your interest rate depends by your down payment. Interesting fact, people who put 20% down usually have interest rate higher than people who put 10% down. Why? Because people who put 10% down will be insured by mortgage insurance company, and this is why they will get better rate. They're insured by federal government. Debt ratio. Debt ratio is percentage you borrow in general together with car loans and other loans compared to your gross income. So if your debt ratio is 32% or 40% or 39% or 44%, all these percentages, they can influence your interest rate. For example, 32% is how much you borrowing mortgage together with heat, okay, compared to your all income. 40% is your mortgage, your heat, your car loan, your RSP loan together compared to your income. If it's under 40% or it's under 44%, all these numbers play different role on your interest rate. You take mortgage for 1 year or 10 years. Your amortization for 5 years or 35 years. You own this home, or if you own second home, or it's rental home, different interest rate. Your location, different provinces have different interest rate. This is why it's good to use mortgage broker, because sometimes mortgage broker can take money from Ontario Bank and help you with a mortgage. Because it doesn't matter where you're borrowing money, in Ontario or Quebec, if you're in Manitoba, or if you're in Alberta, It doesn't matter. You can borrow money from BC. Of course, if you borrow money from credit union, it will be local. Why local? Because credit union works only in their province. So if I am borrowing money in my credit union in Manitoba, it will be only in Manitoba. But if I am borrowing money in Ontario, not in credit union, just in a regular bank. So this money can be brought almost to any province. Some regulations apply in Quebec, some regulations apply to Alberta, but in general, you can borrow money anywhere and use them to purchase your home in any province. And this is the power of mortgage professional. He can bring you lender or bank from other province and give you better rate, even better than maybe exist in your province. Okay, so next, loan type, readvanceable mortgage. I don't want to talk about it because not too many people taking readvanceable mortgage. When I have a client and I see that client eligible for readvanceable mortgage, all-in-one mortgage, some people maybe hear it, all-in-one program, so we can do it. I can do this type of mortgages. If somebody interested in this type of mortgage should speak to me and I will help. And the most important part here, availability to buy down the interest rate. What do I mean by buy down interest rate? When you go to your bank, you will get the bank rate. That's it. If you go to another bank, you will get their rate. That's it. When you work with a mortgage broker not just have a power shop across of different banks. Mortgage broker can call to the bank and say, I want decrease this rate. Bank say, okay, what do you want to decrease? For example, rate in the bank 4.8. Mortgage broker calling can say, I don't want 4.8. I want 4.6 for my clients. So basically, he wants put rate lower. By doing this, broker must buy rate. How broker buy this rate? From his own income. And this is how I put myself different from other brokers. Some brokers doing this, some brokers never did this. I am doing this pretty frequently for my clients. I will say almost every rate that my client got, it's not a standard rate. It's not the rate that was published. It's a rate that I actually purchased from this. Why I'm doing this? Because I want to help, especially to first-time home buyers. What is my interest in this? Very simple interest. The more clients I help, the more mortgages I will do. So I will be able to get more people in the houses, more income I will have. Yes, my income will depend by volume. I will need to do more mortgages than any other broker to get the same income. But this is the way I decided. Because of this, I'm calling myself YRMA, your reliable mortgage advisor. And because of this, I call myself discounted brokerage. What do I mean by discounted brokerage? You always will get the best possible rate if you work with me, just because this is how I am managing my own business. Okay, so let's look if anyone has questions here. I don't see any questions. I still have people, very strong people who are still with me, still watching this webinar. Thank you very much for watching this. Please, if you know anyone who wants to buy home first time in his life, or if you will in a month from now, and 2 months from now, like in a half year from now, you will see anybody and say, oh, or you hear from anybody who say, oh, I'm thinking to buy home, I don't know from where to start. send them the link to this video, and they will be able to learn everything that they should know how to buy home in Canada. Okay? And by the way, if you don't have a real estate agent or you don't have a lawyer and you live in Manitoba, I can help. In some other provinces, I also have good connections, like in Alberta and Ontario and BC. I can help to get good lawyer or good real estate agent in these provinces as well. I'm less familiar with many people in Quebec or New Brunswick and other provinces. But again, if you don't know and you need a good professional, I can contact other brokers in other provinces and we'll do research for you who is a good real estate agent or who is a good professional in other provinces and find you the best one. If you already have a real estate agent and you have a lawyer, so you're good to go, you just need a broker and I will be happy to help you. Again, as I said, please share this video with as many people as you can. I don't see any questions here, so I can continue. We're almost at the end. Thank you very much for being with me. The last thing that I want to speak today, things to avoid during the process. So, if you decided to buy home starting today, starting this minute, like right now in Winnipeg it's 8:46 p.m. Calgary 7:46 p.m. Toronto 9:46 p.m. Everyone who watched me in any province, in any other places, maybe I said wrong time. I'm really sorry if I said wrong. So you have maybe different time, but from this minute, please avoid doing the following things and we will be good. If you already did something from what I'm going to read, speak to me or speak to any professional who can guide you what to do if you already did something wrong. Okay, so if you take out any loans or borrow from any line of credit, it's not good because it can affect your mortgage amount. So if you are planning to do something like this, to take out any loans like RSP loan, to use HBP program, or borrow any money from line of credit in the future, please get advice and you will know what to do, how to do this in good, right way. If you already have loans and you have a problem with these loans, again, I can help. Sometimes we can change these loans, we can think something about these loans, we can refinance these loans, we can decrease payment on these loans. Again, how to do this? Speak to me or speak to any other professional that you decided to go with. And yeah, so taking out other loans or borrow from line of credit during the mortgage process, not really good. Sometimes it's something that you need to do. You need to speak to someone who understands how to do this. Carrying credit card debt. If you have a big debt on your credit card, it's not good. It affects your credit score. It decreases your maximum mortgage amount. What to do? Again, if you don't have this, perfect. So continue not to have any debts on your credit card. But if you have right now, you need to speak to a professional who will help you to fix it. Cash. I know everyone. Myself, I love to use cash. I brought cash when I arrived to Canada back in 2012. Everyone has some cash when they arrive into Canada. Okay? And it's normal. Or anyone likes just to have some cash because sometimes cash is more convenient than credit card. About the cash. Starting today, you stop use cash for almost every important transactions. If you want to buy ice cream for cash, I'm not stopping you. But if you want to buy a car with the cash, discuss it with me. I will explain when it's good, when it's not good, what to do about this. If you already did some big cash purchases before, talk to me. We will discuss how it may affect your mortgage and what we need to plan to do to make sure that bank will understand all this cash transaction. Canada doesn't like cash transaction, okay? Because a lot of bad people, I will say really bad people, when they arrive to Canada, they sometimes use cash for not really legal purposes, and this is a problem. This is why banks are aware about this problem. This is why they're looking carefully on the cash. If you have any cash at home right now and you want to put it in your bank, again, discuss it with your broker. You can discuss it with me and I will guide you how to do this. Next. Next thing here is, okay, if you fall behind your bills, it's not good. So please don't do it again, okay? And you fall behind your bills before, again, talk to me. We will discuss what can we do. Don't maximize your credit cards. Remember, 30%, you use just 30% from your credit card, not 50, not 70. Please don't switch jobs, because if you started to do a plan for mortgage and you switch a job, your lender, your bank may just say, oh, you're changing a job, not good, you're not eligible for mortgage. Why is they allowed to do this? Because if you're changing a job and you will not be on the job, new job, 3 months, and you will not have time until take possession of your new home to do all the paperwork again, you can be in trouble. Example, right now you have perfect job or you have a good job. You applied for a mortgage, you got application filled out, everything good, you have a mortgage, you're during the middle of the process, you're preparing documents, everything good. You found another job, very good job. You need to remember, from the day you will get a new job until you will get a letter from your boss, it will be 3 months. So take this in consideration. So like, let's say 1st of May you got new job, May, June, July. So you can buy home, but it's better if you will take possession of this home in August. Why? Because we need to make sure that you will be 3 months on your new job and your boss will give you good letter of employment and everything will be safe and okay. Sometimes I can help people when they're jumping between jobs. Sometimes my hands just, I cannot do anything, because minimum 3 months is a kind of general requirement across all of Canada. I believe I'm at the end of my presentation. I'm checking if you have any questions. I'm quietly, patiently waiting if you have any questions. And if you don't have any questions, I maybe will end this webinar. Again, you can reach me by texting my phone number. I will put it here, 204-998-8349. This is my phone number. You can text, you can call, you can send WhatsApp message on this number, and it will give you, I will answer. My turnaround time, like when I'm answering on the phone call, sometimes immediately, sometimes if I'm with a client, I will not answer you. I'm really sorry. If I'm with a client, you will need wait. So usually if you text me, I see your text, sometimes I'm replying, sorry, I'm busy, text me in another minute or 2 or 3, or if I'm on a call with the bank. As soon as I will finish, I will start to answer or call back in an order. Like if I got a message from you and another person who was the first, I'm calling or texting him first. Okay? I thank you again. I hope everyone enjoyed this webinar, and I believe we can finish it. Thank you again and have a wonderful evening, and tomorrow is a Friday. Woohoo! Yeah, last day of the week. I know some people work Saturday, Sunday. I'm personally work also Saturday, Sunday. So if you will decide to reach me on Saturday, Sunday, you are more than welcome. And yeah, thank you very much again.